All right, we're back. It is Friday, and as always, we do our Friday financial wrap up. I've got my good friend here, Mr. Michael Zuber. How you doing?
Doing great, man. I really appreciate these Friday calls. Thank you very much for having them with me.
I love it. I love to be in the conversation with you, and then I always get to ask my questions. And thank you for what you do for our real estate industry. So
Mhm.
let's get right into it. Unemployment. Tell us about unemployment this week.
Yeah, so seemingly we've been talking about new unemployment claims for 18 months now. Most of that time it was horrible, record numbers. Then we were on a good trend going negative or going down the slope, but we have a negative trend. We have 3 weeks in a row where new unemployment claims are up. And that does not bode well for an economy that's kind of turned the corner. That doesn't bode well for, the big unemployment extra check from the Fed is gone. I do think we have some subtleties in how unemployment is counted. All right, the unemployment claims, right, the U3 versus U6, don't have to worry about it, except there's a big difference that you have to be looking for a job to be included in U3, not in U6. So I think we may have some dirty data that is making this happen, but we aren't going to know for sure until we get the September jobs number, which is next Friday. And it's going to be interesting. But right now, the trend with unemployment claims is not particularly encouraging and has to make Jerome Powell nervous because he was hoping to break below 300, which would have been kind of pre-pandemic. But right now they're heading up. I think they bottomed at like 315 and they were like 365 or something this week. So definitely trending the wrong direction.
Interesting. We'll have to keep an eye on that. So let's talk about pending home sales. What do you see there? And
yeah, it's kind of back. Yeah, buyers are back. And again, if you watch my daily show, you would have known that July was odd, right? People went on vacation. Even I went on vacation. Buyers were kind of going, right, we're open. The country's open. I'm going to go to Disneyland or wherever you chose to go. So it came down, inventory built up, but the August numbers came out. I think they came out Wednesday and they were like record numbers. Appreciation for the countries, again, 19% year on year. The biggest push was in the Midwest and the South, which are the cheaper of the two markets, but even the West and the Northeast were up. So yeah, it seems like home sales are, they're back. The buyers are back.
It feels like just, being in the mix and in the flow of transactions, it feels as though there's been a lot of pent up demand. And now we're starting to see people say, you know what, I'm going to move. I'm going to sell my California house. I'm going to Florida. I'm going to Tennessee, whatever they're doing, or just getting closer to family. Yeah. It just feels like maybe those pending sales also have bubbled up because of the lack of sales last year. Is that accurate?
Yeah, it could be. Another thing that, again, not a lot of people realize, and you only do this because when you go back and look at the data long enough, is I think interest rates have bottomed. And what happens if you are a borrower, right? You're on the fence, you're thinking about it. You get a note from your mortgage broker, like Matt, the mortgage guy who I talked to on Wednesday, and go, damn it, rates have gone up a quarter point on a $500,000 house in California is $120 or whatever it is. Rising rates actually pull buyers off the sideline, right? It has kind of a counterintuitive, right? There's people that have been thinking about it. When rates tick up, they're like, okay, now's the time. I don't want to lose another quarter point. So I think that's actually what we're seeing a lot of people that were wobbling on the fence become active buyers because they don't want to lose. They don't want rates to go against them again.
Yeah, makes perfect sense. So let's move to the next PCE. Tell us what PCE is. I know we've talked about it before and how it relates to the Fed.
Yeah, PCE, personal consumption expenditures, really is only interesting because it happens to be the Fed's most important inflation indicator, right? For you and I, it's probably CPI, maybe PPI if you run a business. But for the Fed, it's PCE, personal consumption expenditures. And it came out this morning and it was a bad number. It was ran hotter than expected. It's up from last month. It's 3 months in a row. I think it's at 3.5 or above. Service or products were up 5%, services up 3.3. It's just all kinds of bad. And that's why Jerome Powell is like, damn it. Inflation is a hard thing to beat. It's going to stick around long. He's now talking about it not subsiding for about a year, right? And I'm like, well, when did a year become transitory, buddy? But again, if you watch my channel, you know that I've been saying he's wrong. He's trying to sing a song to, keep rates down. But yeah, inflation, it's inflation's a worldwide thing. This PCE thing is very US based, but Germany, the largest economy in Europe, came out with a number that's bad. It was 4.1, highest on record. It's a worldwide phenomenon now that all of us are suffering through. And again, what I want people to realize, we hear a lot about tax the rich lately. I wish the media would be more accurate and just acknowledge that inflation is a tax we all pay. And unfortunately, it hurts the people at the bottom. The rich can afford it. Inflation is nasty. It's negative. It's rent, it's gas, it's food, it's healthcare, it's childcare. And I just wish the government or the media would talk about inflation being a tax. And I think that would get more people's attention. Right now, people think inflation and, oh, it's all these things that don't bother me. No, inflation hits your pocketbook every day with every purchase.
Interesting. And, I know we talk a lot about inflation. I know you had talked about some numbers. I feel like you said there was, I believe like a 5.2% inflation. And obviously I want to address this because I think this is a little off script, but
sure.
Specifically when that whole 50-year, that whole timeline you did from 1970s, I can remember as a kid, hearing about inflation being incredible, like all this record inflation in the 70s, in oil and gas lines, people standing in line for gas, and lots of controversy. Real estate can still go up, right? We had a lot of appreciation during that time too, right? Like, let's talk about that.
Yeah, that 50-year chart was eye-opening for me because, again, if we go back to the 70s, which is a decade I think we're emulating right now, we have a rising rate environment, which generally speaking, think real estate will go down. But we did have an inflationary environment, and a lot of that inflation hit wages, right? Wages went up from 70 to 79, 87 or 88%. That also meant housing went up, and housing went up in an interest rate rising environment. Just that hurts people's minds when you think about it. But rates went from 8 to 11.5, and real estate went up 102%, I think, or 106%. And then, oh, by the way, if you're a landlord, you got a double whammy. Rents went up 117%. So again, what I'm trying to tell people is if we are going to repeat the 70s, you want to buy in 1970 because you're going to lock in the lowest interest rate of the decade. You are also going to buy at the cheapest price, and you're going to have 10 years of appreciation and 10 years of rent. And if you have a fixed rate 30-year mortgage at the lowest rate of the decade, your cash flow and balance sheet or equity is about to explode. So that's what I'm doing. I tell everybody all the time, I'm going to buy as much property I can with 30-year debt right now.
I love it. I love it. Love it. Love it. Well, that's awesome. Let's move forward to China. Now Evergrande. I feel like you were in my world, in the real estate community. I feel like you were the one that broke this news.
Yeah.
What's going on there?
Yeah. So it's funny. I talked about the next black swan about 90 days ago, and I pointed at China's property market. I did not call out Evergrande, never researched on it, didn't know about it. But I said that property market and that debt structure is a problem. So I nailed that. Evergrande comes out, they're $305 billion in debt. They can't make interest payments. Property values going down. It's a problem. I think Evergrande is going to resolve much like long-term capital management, I think it was called, where it's a non-event historically speaking. However, it's going to impact China. I think China's debt market is you're going to have to pay higher prices to borrow money. I think China's real estate market, the bubble's been popped. And, is it a bubble or is it a crash? I think right now it could really be a crash, but we'll see. It's kind of early. But the real question becomes does any of that China stuff hit the US? And I have to think about that over the weekend. There's some obvious things like China rich are going to move capital out. They're going to want to be safer. That's coming, but that's really been here already. Does it come more? Probably. Does foreign capital that was lending to China looks for a safer place? Probably. But the biggest thing is the China consumer, right? China is the biggest country on the planet population wise. And I suspect that the average Chinese consumer is going to get more conservative and start saving more. And I think that could have worldwide implications. So I've got to think about that more. I'm going to try to do that over the weekend. So lots of stuff going on in China.
Very interesting. Well, Michael, thank you as always for everything you do for the community. I have this book, which everybody loves, by the way. This is a great book. If you have it, go on to Amazon. Normally I say go on to Amazon and do a 5-star review, which we would love for you to do. But Michael, do you have the new book? Let's talk about the new book.
Yes.
Do you have that there with you?
I do. I have this little one. It's not for resale because as authors, I can get, I can say, hey, what's it going to look like when it comes out? So that's what you see there on the line. This is not on the books that you will get. But yes, that first book, Ty, I wrote for myself. I wrote as a way to remember when, right? Because I never celebrated the successes. This book I wrote for you, for the entire audience. Real estate investing is there are hundreds of ways to be successful. So the next book is 15 conversations with people that got successful in lots of different ways, started different areas. We got a single mom with 5 kids in there. We have, nurses that work part-time, then full-time, and now travel the country in an RV. There's just 15 cool stories. And my idea is you'll read it cover to cover, and then you're going to say, those 3 stories, those 5 stories resonated, and you're going to read them. Because my vision for this book is you are going to be me when I'm 32 or 33, which is decades ago. You're in the game. You got 1, you got 2, but it's slow in the beginning. My hope is you take the stories that you like and you reread them, because sometimes it's just, you need that reminder. And I hope I've written 15 stories that people will go back to time and time again. And yeah, that's my hope.
I love it. Show the book one more time, please.
One rental at a time, 15 conversations, real estate millionaires.
I love it. So here's what we're going to do. We're going to do something special. Michael didn't know this. This was something I just threw at him. And I said, hey, let's do a promotion. It's on pre-sale. The books actually just started shipping. They started.
Yeah, I got a couple of text messages yesterday that the book is actually arriving. The book is actually hardcover or paperback. I was told the first ones were hardcover that have arrived, but I would expect paperback to be arriving any day now.
Love it. So they're beginning to ship now. So here's what we're going to do. We're going to do a promotion, and it's very, very simple. Buy the new book, go to Amazon, buy the new book. And then all you got to do is screenshot off your phone or device, the order, and then either message Michael with it or message me. And then what we're going to do is we're going to do a free bonus gift. We're going to do a free masterclass. In this masterclass, we're going to have Michael. We're going to have some other experts as well. Maybe even invite some of the 15 millionaires,
Sure.
Get them to come on, share, talk about where we can ask them questions. We're going to go ahead and do a lot of Q&A. You can ask Michael anything and everything you want, and we'll do it in a Zoom format as a masterclass, as a bonus. So again, buy the book, take a screenshot, message it to Michael or to myself, and then we'll keep a list. If you send it to us, you're going to be on our list of invites, and then we'll get that invite out. Michael, thank you so much for all that you do for our community. Thank you for the Friday Financial News. Thank you so much for all that you do.
You got it, buddy. Take care. Thanks.
Have a great weekend.